On the day, we saw some key focal points we need to talk about. Specifically, look, your previous highs here and here. Look at what happened on the day. You came exactly down to that level, about 13.1, and immediately are getting bounces, and buyers are stepping in. Now, another thing we need to be looking at as well is key data coming out of the day. Job numbers, if you don't know, absolutely smashed. We're going to go into exactly what's happening here and why this is so significant. But as you can see here, the labor market added 528,000 jobs in July, easily beating the Dow Jones estimate of 258,000. A massive beat there. What is going on with unemployment? How do we see things moving into next week? And key data points we need to be paying attention to. Let's get to it. Now, when we come back into this chart, it's really interesting if we go back to the 15-minute because I want to show you key overall levels. Now, when we get in here, we had about a midpoint of 13.18, and it was kind of yesterday's low as well, which we mentioned. We've been going over these key targets this whole week, and ultimately, this has been some of the best buying opportunities that you're getting on the market right now. Now, people keep asking me every single day, am I bullish? Am I bearish? Where am I going? What's my longer term, shorter time outlook? Now, going into shorter term, the target remains the same. Every video I keep saying it, 13.5, 13.5, 13.5, 13.6 in particular. Now, as you start breaking up, what's happening here? So all day long, if you're looking, you are making basically higher or lower highs, if you will. And you also made a lower low here. Now, this was the big question mark going into today, was how you made these two lower lows. So you come down making this low, come back up, get rejected back here. Now, this is roughly market open, and this is your go up to the upside and then come back to the downside. Now, when we come back here, I want to look at ES futures representing SPY. So basically, if you don't know, NQ represents the Nasdaq, ES represents the SP500. Now, as you're moving up, there's a difference here. S&P is officially moving better than the Nasdaq was today. Very interesting to talk about. We've been talking about this a lot here on the channel as well. ES is pushing up. Now, you're obviously in that resistance level. However, again, I want to put it back to my point of how I see us moving going to next week. Now, we just got pretty good information going on to this week. Last week, we got the positive GDP numbers. This week, we get the great outlook on jobs, and it basically puts the Fed in a great position to do whatever they have to do to handle inflation. Now, I want you to understand, I'm talking in a short-term outlook versus a long-term. Long-term, I'm going to get to that here in a sec. So in the short term, you're looking, in my opinion, for more potential upside. You came back down into our key range, but something happened today. You opened up right here almost to that bottom of the range and next to the monthly. However, you bounced quicker. So you're making higher lows on a broader time frame as well. Worth mentioning. I'd be liking what you're seeing here, or lower highs. I'm sorry, I keep mispronouncing what's happening there. So you're pushing up as well here. You do love that. So the S&P, as we look at this, in my opinion, it's moving better than the Nasdaq, and it's holding key levels as well now. Going into this week, it's setting up at a very good overall level. So when I go back to yesterday's video and we look at what happened, and this also leads me to the point, if you're not liking and subscribing these videos, it helps out tremendously, and overall, it keeps the channel alive, and we're doing very good overall here on the channel, really getting more subscribers in, so I appreciate all the love and support. But I was talking here, and I said bulls take control on Friday, and I got a lot of hate in the comments, and as usual, but I want to talk about what's happening. On these dips, something to be mentioned, and it's something I keep mentioning every single day here on the Nasdaq, is you're getting bought right back up. So you're coming down to their key level, specifically 13.1, your previous highs that we mentioned back here, and look, you're getting bought right back every time, and then you eventually break the trend at the end of the day, which looks really good, I might add. It looks very positive going into next week. Now, going back into this trend as well, I just want to highlight that you're being bought up every single time, bought up and bought up. What happens previously? Again, if you've been here on the channel, then you're probably going to get a little bit annoyed looking at this. You have to keep reminding people what happens typically when sellers are attacking on the market, when they start showing up. You get pushed down relentlessly. You can see continuous downside, 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 downside. I'm just saying here on the 4-hour, you continue to get bought back up at previous highs and key support ranges, and you're holding them again and again. Again, looking here on the 4-hour chart, look at how you're holding this previous level. You can see the lows you had right here from yesterday. Guess what? You're holding up right now. This is exactly what you want to see on the market, which in my opinion leads me coming right back to this key level, 13.5, 13.6, the same level we mentioned way back here. So again, keep it on your radar. Again, it's still my target. Where do I flip into a bearish overall outlook? We start to break below previous highs, 13.1, get below 13,000. That's when you're getting back into a bear overall viewpoint. Looking at SPY, look at how you're holding up. They keep trying to push you down and you just make the ground and come right back up, making higher lows as well. So these are things I'm looking at. You're just inching and consolidating right below the overall resistance. And in my opinion, it has to lead you to believe with enough momentum going into next week, there's a high possibility you could break back into this illiquid area, pushing to 426 to 430. But again, the big target I'm looking at, again, is for Nasdaq, not really for the ES and SP 500. It's going to remain on Nasdaq of 13.5 because I believe Nasdaq has been leading the overall market. That's what I like. That's what I've been looking for. I want to look over at Cheddar Flow really quick to look at the overall options flow. Now you can see QQQ still sitting, put to call ratio, very in favor of the puts, which would tell you downside may be coming. Going into something like SPY, what's happening here? Again, 2-to-1, a lot of puts coming in at the end of the day. Pretty big orders as well. Now you can see if we come over to premium, this is what I like to do and show you where the biggest orders are. Do not get confused. The biggest order on SPY are still towards the upside. Yes, upside contracts here. You have some bigger sell orders coming in as well for puts, but I'm just telling you, the biggest orders so far are indeed on the call side. On Qs, I want to do this as well, going over to premium. As we look here, it's worth mentioning the biggest orders are to the downside, with this being the massive one, the 330. These are in the money options being bought for puts. You can see 16.8 million worth. Very big order, probably the biggest order you're going to see across the board. We also have some calls coming in there as well. So looking at this as a whole, you have to be interested. You have to be looking at this and saying what's going on here. We're going to go over some fundamentals, but I want to talk about the VIX as well. You are seeing calls being bought here as well. And we're going to get into this specifically with some fundamental viewpoints on why I am looking at the market semi-bullishly going to our 13.5 target. As we get into VIX here, look at VIX on a 4-hour time frame. You are continuously coming down now. And in my opinion, it's a very, very clear channel. If you will, you can actually just see you're just trending towards the downside with the occasional break to the upside right there and there. So you're just getting channeled down to these key levels. I would have to bet this is an overall pretty broad statement and kind of a riskier outlook, but I would anticipate you're coming down to 17 to 15 overall on VIX. I know people are gonna be like, Tyler, that's absolutely crazy, but that's where I'm looking at. Now, we also have mentioned anytime that VIX comes down these levels, in my opinion, it's just worth getting overall VIX calls because you tend to bounce so often in this range. But also looking at this, something that also has been speaking to us is J&K. This is something I've been talking about in Discord all day long. Was even though you weren't really getting the great movement on Nasdaq or pushing up to the upside and breaking key levels there, what was happening on J&K? You open the day down here on our junk bonds and you are continuously pushing up with an ascending triangle. Now, if you don't know, if you're new to the channel, again, junk bonds represent a risk on environment on the market. So if junk bonds are going up, hypothetically, you're looking at the market in a bullish sense because people are putting more money on riskier assets on the market. So think junk bonds going up mean that less valuable things and higher risk trades are being traded. So know that in the market. So yeah, we saw a gap down today, but look, junk bonds continue trying to climb back and back and back. This was definitely interesting that you're making higher lows as well here. And if you go back to the NQ chart, look at Nasdaq. It's almost like an opposite chart here. And I love that you broke above that declining overall trend and you started getting above it at the end of the day. These are things that look really bullish to me going into next week. Now, I also want to talk about some stocks here, but I want to keep on with the fundamentals because we haven't talked too much about this. Now, I was tracking the US 10-year and 30-year. This is the ultimate inverse. So people are always talking about yields inverting. If you're new to the channel, this has been the biggest yield inversion that you should watch because this is going to identify, in my opinion, when a recession is over or when you're starting to see inflation being handled. Now, if we come back and we look, again, I haven't gone over this in a while. So we have our Trump recession that we almost hit right there. And we remember we had a big overall drop there. You have your housing bubble right here. So when you came back to a yield inversion there, and then your dot-com bubble right here. So you can see these are only critical times in history that this has happened. Now, it's also worth mentioning that you'll come up to these levels, you'll come back down, and you'll pop back up. A great example is looking at something like the housing bubble. You started to see you came all the way down to about 95, then you came back up to 99, back and forth for almost roughly half a year. Now, coming back to the dot-com bubble, this is more interesting. You started to see came back up to around a full inversion, came back down, and you pop back up for roughly 3, 6, 7 months right there. So you're starting to see this is getting very interesting. Now, looking here, you're coming to a steeper decline, but it's also worth mentioning that you're definitely following the key trend to the upside here on yields. So this inversion has me definitely interested looking at what's happening, and I want to see how much further you can get back to the upside. Now, if you get back to an inverted point of a full 1% inversion, which means the 10-year has officially gotten back above the 30-year, you're looking very bad, and I would have to start looking at more downside overall positions. But this is definitely different than this time, going back to 2018, your housing bubble and the dot-com bubble, because we do not have the financial tools that we had during these other periods to push us back to the upside and overall help the economy. That's why you saw such a massive increase in the overall yield inversion here in comparison to previous overall moves. So that's what I'm looking at there, and that's why I think it's very important. So definitely keep it on your chart, be looking at it. It's not to a dangerous level now. However, this is definitely concerning. So these are all the different areas that I've been watching and what I've been looking at overall. But again, shorter term, looking at the market, you want to get more upside, and it still has me targeting that key area. But you can also see that junk bonds have definitely been getting hit over the past few months. This is a weekly chart, so you know. Also worth mentioning that junk bonds have broken out of this overall downward channel, which is another reason you have to remain on the bullish side of things. When do things change for us to be bullish? Can we start flipping back to maybe a downside narrative? Going back to this chart, you need to start breaking back below key levels, and you're just not doing that right now. So right now, before I go into any of those other stocks, I want to highlight, I'm looking for downside if you can break below the lows that you're making right now. If you get back below 13.1, I'd be semi-bearish. If you get below 13,000, I would definitely start flipping my narrative and being concerned about overall outlooks. But we have some big news going next week, so you know. The major groundbreaker going next week is 100% going to be CPI data coming out on Wednesday. Just know that CPI data comes out next Wednesday. That's going to be the day. Be out of your positions and just sit on your hands. But so far, what have we had this week? We've had, beginning of the week, we had a revision to our GDP, but it still shows growth. And then we also had job numbers smash. So bullish behavior so far beside the revision, but overall, it's still overall for growth. So that's what the government is telling us. That's not what I'm telling you. It's what the Fed is telling us right now. Now, going back here, that's what I'm looking at. Next week, what overall plays am I looking at? What am I watching for? Let's talk about this because this is where things get more interesting. Now, I've been talking a lot about Netflix, and I want to talk about what I'm looking at here. You continue to not be able to get back over 229. That's the concern. But the ultimate play here is, and still, even if you're not following the trend, you can see you're making the higher lows continually making the higher lows. You're continually making them on the 4-hour chart. So go look at the 4-hour chart if you need to. So you still look good there. However, you're going to have to hold and break above these levels of 231, 232. The whole play here is showing you a risk to reward standpoint. Looking at Netflix, if you can really hold this and you can hold a breakout on NQ and SPY, then you're going to get that push to 247, 245. Just because shorts will start covering in the way the market's moving right now. You can go look at the overall chart, but you have no liquidity all the way to that range. So I still love Netflix, still looks good, but overall, it's a little bit risky down here. You still need to get a mount back above. I had to close my positions. I may reopen next week. We'll have to see what happens. Number 2 is going to be Microsoft. I love this position. Me and Jay Reem, we still have our $300 calls. We mentioned it in Discord. We have trimmed and then overall extended them as well, but we like what's happening here. Microsoft's doing very similar things to something like Netflix to look at, except you don't have the giant gap that you had on Netflix. But you're still holding higher lows and making higher lows here. Looking at Microsoft, we're also targeting around 288 to 292. I believe you have massive upside here, and I think Microsoft is just lagging behind. But over the past 3 weeks, you've made that bottom down to 250, and you are moving crazy. They reported decent earnings, a good outlook. Everything you want for more upside here. And now you're also mounting previous highs near the end of the day. Bullish behavior. And even with NQ on a dip, look at Microsoft. It's still at the overall highs. NQ starts to get a push on Monday. Microsoft easily could break out, pushing that overall 290, maybe even $300 range. I want to talk about chips for a second. Looking at Nvidia and overall AMD. Now, Nvidia has gone on a tangent and it just keeps running. Really with the help of AMD's earnings. Now, Nvidia, I have you coming up to roughly that 196, possibly $200 range up here. I'd be a little bit concerned opening up any calls in this range just because you're at such a key level, right? So when you're coming here, you have a lot of resistance here. You have one at about 191.5, 193. You have some more here roughly at 195, and again 196. So you have key levels that are going to be tough to get through. But I do believe you have a lot of momentum behind these chip plays, such as AMD and Nvidia. We've already seen AMD hit our targets of 100, which was one of the easiest trades that we had maybe all year. And now you're forming this bull pennant up here once again. So you do like to see this, and you're getting some pretty great looking charts being established. But just be careful. Don't be pushing all in. The key area to watch to know if you should be trading this upside, what is it? It's going to all come back to Nasdaq. So if Nasdaq continues to break out and hold these ranges, then you know these are great opportunities on the stock side of things. I'm not really looking at my stock for the indicators. What I'm looking for are the indexes, right? And I've already mentioned I'm not interested in trading puts or downside leverage to the overall bearishness on the market until you get below 13.1 and 13,000. It's just in this range, you continue to look bullish, and on the ES and SPY, you're making higher lows. And at the end of the day, you almost made a higher high there. So you look bullish. You look like you want to start getting that upside behavior going into next week. Last but not least, I want to mention Meta. Now, Meta is a really interesting play, in my opinion, and it's going to give you both opportunities. It's going to give you downside opportunity and upside. I am personally not looking for downside positions here until you break those levels. But until then, look at what's happening here on Meta. You have held your range of support like a champ. People in Discord, we were talking about it, possibly getting some downside play here, but you are holding that support there. You just continue to hold this range over and over and over. So this range has become a clear area of support for Meta. Look at how you're holding and dominating this range. If you can make a new high above 167.8, in my opinion, you could easily test back to 169.5 and get back in that range of 171.5 all the way to 173. Very bullish looking chart. So you're looking to just get back above, make a new high here, and you're back in business looking bullish. If you get below and make a new low below 165.5, 165.8, I'd be looking for that downside pressure towards 160 to 161. So you're definitely getting both opportunities here. And if there's anything I trade to the downside, it'd be Meta. So if you get that breakdown, then the retest, you're looking for that downside pressure to 160, 161. Again, I would not trade the clean break. I would be trading and looking for the retest of that zone back towards the downside. The last thing I'm going to let you out of here with is Tesla and the overall market breakdown here. We mentioned this a few days ago. If you got the breakdown, we expected that touch of 870 to 855. Key range down here. Haven't touched this. Go look at the previous video. It's been the same thing. You broke back below your level of 903, and actually Jay Ream called this out to a T in Discord. We weren't taking pretty much any trades today. The only trade I had today was a loss on SPY as well. It just cut our overall levels, had to get out of it. Didn't take anything else on the day. But looking here, he called if you hit that 910 level, got rejected, and you came all the way down to 860. Monster play, but Tesla, if you don't know, they just approved the, I think, 4-to-1 stock split. So be watching out for Tesla because the stock split definitely did create a quote-unquote dilution level. So just know what's happening here and the overall dangers of getting into Tesla right now. But right now, you're at a major level. I would expect a bounce from this level. If not, next range down to 820, 825 range down here. That's where I'd be targeting. And your previous lows, of course, which our previous highs is 840. So 840 right here. And then your retest most likely of this range of 815 to 820. Next range on Tesla. That's where I wrap the video up. I'll see you guys on Sundays. Have a good one, traders.